Hi, I'm Michael St.Clair. I'm sitting here with Egon from Greverz and Sheila at the Costa Brava, and we have been discussing on behalf of our American friends and partners, entrepreneurs, accountants, lawyers, people who have concern for the world and how should they safeguard their wealth. So Sheila, you meant to ask some questions.
Yes, thank you, Michael. And thank you, Egon, for being here to answer some of these questions that have been piling in my box for months now. One of the main concerns is the risk that are going on now in the world, financially, as far as living positions on the planet. I mean, people are really starting to get nervous and scared, which is not a good way to launch what they need to do in the future when they're so scared they don't know what to do. So if you could talk about the risk and what's coming. And
Sure, I'm very pleased to. Actually, my life has very much been involvement in trying to understand risk, and there's risks at so many different levels. But if you understand the risk and the downside, it's so easy to deal with the upside, because the upside, the good things, they take care of themselves almost. But we have to see that we are well protected, whether that's financially or how we live, etc. So as I see the world now, the risks are greater than they've ever been in history, because you have basically every single major nation being bankrupt. You take Japan's totally bankrupt. China's borrowings has gone from 2 trillion to 30 trillion in this century. The financial system in China will not survive in its present form either. Europe, as we know, we're sitting here in beautiful Catalonia in Spain, and it looks like times are wonderful, but down below here in Spain, they're having massive problems, like they're having in Italy, like they're having in Greece and in Portugal and in France. Europe is in a mess and will not get out of this without massive changes to life for everybody. And then you take the US, which is the most indebted country in the world, and has just been living on debt and on printed money. So that's the risks from a economic point of view and a sovereign point of view. But then you have also the financial system almost went under in 2006 to 9. Governments printed unlimited amounts of money and issued massive credit, and it temporarily postponed the problem, but it hasn't solved it, because issuing more debt that can't solve the problem. You can't solve a problem by the same means that created it in the first place, i.e. there's too much debt. So therefore, we are now in a situation when the risk has gone up exponentially since 2008-9, and world debt is up 70% since that time. But now everything has started to turn down. World trade is turning down very fast. China is turning down. Commodities are crashing. And emerging markets, which have borrowed massive amounts of money, are now in a rapid decline. On top of that, the third risk that I see, so you have the economic risk, and the second risk is the banking system, which is unlikely to survive in its present form, in my view. You have all just derivatives of $1.5 quadrillion, as against world GDP of $70 trillion, and that $1.5 quadrillion derivatives will just one day collapse because it's worthless. So that's and the banking system is therefore going to be under tremendous pressure, and your money in the bank will probably not be safe, in my view. And on top of that, then we have now worldwide a geopolitical risk. I won't go into the details, but we have risks in the Middle East, which are enormous. We have risk with Russia and US and Ukraine, North Korea, South China Seas, between China and USA. So there are risks everywhere, greater than there ever been. And therefore, when you have that level of risk, you want to protect yourself. Now, if the financial system comes under pressure, which I think it will do, the banks might not survive, or governments have to print so much money that the money in the bank will be worthless, or the banks might decide that all your savings got to be put into U.S. treasuries or whatever government bond, German or French, whatever country you live in. So therefore, because of these risks, you've got to take protection, and that's, I think, what you want to ask about. How you protect yourself.
How do you protect yourself? If you could give us a short, I know there's lots of ways to do it, but you've got I think, a more solid, grounded one in metals, because you can purchase them, you can store them if people already have it, from what I understand.
Yes. So there are. We already in 2002 decided that the world was going to have real problems, and therefore you needed to buy insurance. And as we look at the world, the best form of insurance is physical precious metals in your own possession, stored outside the banking system. When I said in your own possession, I don't mean you should store them at home, because that's a risk. I'm saying it should be owned directly in your name, so you can go to the vault that you determine where you want to put the gold, so that you know that it's your gold, not in the bank, because if something happens to the bank, you're not going to get the gold out. And you don't want to store it at home, because the risk of somebody, if times get more uncertain, people will steal more. They will come to your home, take your children or your wife or whatever, and say, where's your gold, or where's your jewelry, or where's your money? So therefore, don't store it at home. Store it in a safe jurisdiction outside your country where you live, because that way also you can actually, if something happens in the country where you live, you can actually escape to your gold, like the Jews did in Germany in the 1930s, like the Asians did in Africa, many countries like Uganda. They were thrown out and they had gold somewhere else, and they could then live on that gold. So this is why we've devised a method where you can store gold outside the banking system, in Switzerland or in Singapore or in Hong Kong, and because throughout history gold is the only asset that has maintained its purchasing power, because governments continue to print money to an extent that money becomes worthless. And therefore everything that money buys just becomes more expensive all the time. But gold is the only money, because gold is the only real money. It's the only money that has survived for 5,000 years. Every single other currency goes down to zero sooner or later. Like Voltaire said in 1729, paper money eventually returns to its intrinsic value, zero. And the currencies now are on their way. They're down $97, mark or euro, pound, yen, they're all down 97 to 99% since 1913, and they will go all the way down to zero again, because governments will print so much money to destroy them. This is why you have to protect your assets and buy insurance.
I know it all sounds very scary, but it's not if you know how to work around what's going on, and that's what you're providing, some answers how to go around it legally, I might add. Not a lot of this offshore money. In America, people had problems with that.
Sure.
And actually, it's illegal. It's legal to have money in other countries.
Absolutely. So, of course, it's very, very scary. But I see. My job is not to scare people. My job is to make people aware of the risks in the world. I don't want to frighten. Now, I'm not a prophet of gloom and doom. I'm a very optimistic person, actually. It might not sound it the way I talk about the world economy, but all I'm trying to do is to identify the risks in the world, and therefore, it's like I just, take the parallel of fire insurance. If you have a house, you buy fire insurance for your house. Why? Not because you expect the house to burn down, but if it does burn down, it's good to have, because it will protect you from a total loss. And you're not buying it because you want it to burn down. And it's the same with gold. Gold is insurance against all these risks that I've talked about, and especially in times when governments worldwide are mismanaging the economies in every single major country, as I just mentioned, then you've got to buy the insurance, and you have to buy the insurance before the fire starts. And this is why right now, because of those very heightened risks that we see in the world, you've got to own that insurance. And we have come to the conclusion that gold, because it's actually is the only money that has survived for 5,000 years, is the best way to insure your wealth against what could happen in the world. I think there's a high risk of it happening. But at the same time, I hope I'm wrong. I hope it never happens. But at the same time, I know that right now you've got to have your insurance against those risks. And Yes, we do. We organise so people can buy gold through us, store it in safe vaults in Switzerland, Singapore, and Hong Kong, or we can transport gold or from anywhere in the world where they have it now with security insured transport into the vaults that they decide. And this is how we help people, and the people know that they can go straight to the vault and get their gold out if they want. They don't even need to ask us. They can go just with their certificate and go to the vault and say, I want my gold. So it's and we do it in the safest jurisdictions in the world. And I think it's absolutely critical people think about now this form of insurance.
I agree. And we talked about before about when I was driving through France about the insurance offices in France are called assurance, which the metals will assure us of our future, because they're not going to be going down to zero. They're not going to drop like 97% like the paper currency. That's for sure.
Yeah. No, this is the thing with gold. Gold is money. Gold, as I said, is the only money that's maintained its value. Gold can never go to zero. It's never gone to zero in history. And it will just, an ounce of gold 2,000 years ago bought a good suit for a man in the Roman times. Same 100 years ago, an ounce of gold bought a nice suit, and that's what it does today too. So gold is not gold going up, it's paper money going down. And this is what, especially when governments are printing more money than ever, investors or just ordinary people have to protect their assets against this destruction of the paper money. And so so gold has many purposes. One, as I said, you protect against the fall in the value of the money, and two, you also insure yourself against potential risks in the banking system, which are enormous. And I think that, in my view, the banking system cannot survive. Whether it survives for another few years or not, we don't know. But that's why you have to be protected today against this risk anyway.
And the insurances that the banks have to protect it in case it folds, that is not really true insurance, is it?
No, I mean, that's a joke. You're talking about the FDIC has a capital which is a fraction of a percent or of the liabilities that they will have if banks start going under. So that will not cover anything, and then the United States government and the Fed will have to print trillions, hundreds of trillions or more. World debt is probably around 230 trillion, and in 2006 it was about 130 trillion. So it's just growing exponentially, and then if you add to that the derivatives of 1.5 quadrillion and all the unfunded liabilities like in the US, Medicare, pensions, etc., you're talking about not just 230 trillion, but you're talking about maybe 500 trillion of debt in the world that can never be repaid because it's just going up and up. You know what? The US government has been running a budget deficit since 1960. They have not had a proper surplus since 1960. So over 50 years, the US has lived above its means. And also the current account, that is the difference between what you import and what you export. The US has had a deficit since 1975, which means that the US has been just buying more and more, borrowing than they're exporting, and then they're borrowing the difference because from China or from Japan, etc., but because they buy the government bonds. So the US has been living above its means for too long, and this is why the US economy will fall. Whatever people think, it looks good, but it's only looking good like the rest of the world because of printed money. Not because of a inherently strong economy. And sadly, that's why we will have something happening in the next few years, not just to the US, but to the world as a whole.
And I think that's really an important part to get your news from trustworthy sources, because we are given so much misinformation by the major news channels. But I get a lot of great information from your blog. And you changed your website, didn't you? It's like, is it
Well, we have two websites. We have the goldswitzerland.com, goldswitzerland.com, and then we have the other one. The company is called Matterhorn Asset Management, and so we have the other website is called matterhorn.gold, matterhorn.gold, like the big mountain, Matterhorn, in Switzerland. And so, yeah, we have two websites, and they really, on these two, you will find all the information of how we actually service clients, and at the same time, I give interviews to the media. I write articles every week. There'll be something new on the website, so people can just go to the website and find my latest views about the world. Of course, the views haven't changed. I mean, they are the same. The risks are there, but there will always be up-to-date news about what's happening, etc.
I really enjoyed your last week article about your 50 years of observing what was happening in the world of finances.
Yes, it's interesting because, once life experiences form us, and they help a lot, and having 50 years, almost 50 years of business experience means that you've seen it all. I've seen gold going from $35 in 1971 to $850 in 1980, down to $250 in 99, and then up to $1,900 in 2011, and now gold is in an uptrend again after the latest correction. So so we're now at around $1,250. And $1,250 is an absolute bargain. Gold now, in my view, is as cheap as when we first started buying it in 2002, when it was $300. But if you inflation adjust it back to 2002, you're basically down at that level again, at $1,250 a day. So gold is now undervalued and unloved by everyone because nobody owns it. Only about 0.5% of world financial assets are in gold. So very few people own gold, and the day that the world realizes that they have to protect themselves, and they will buy more gold, and also there is a lot of manipulation of gold, so there's so much paper gold sold to investors that doesn't actually exist, which means when this paper gold, when people want to turn that paper gold into real gold, there won't be any gold there. So this is why at some point gold will go up dramatically, and in my view gold is going to reach at least $10,000 in today's money. But you're not buying it to make money. You're buying it to protect your wealth. That has to be remembered. You're not buying it to go in and out and take profit. You're buying it to protect your other assets and against total destruction. But even $10,000 in today's money, I also think there's a risk that there will be hyperinflation in the world because governments will just print and print. US will print. Europe will print, or already printing will print more, Japan will print, China will print, and therefore that the money will drop further in value, and therefore gold might go to $100,000 or $100 trillion like it did in Weimar Republic. But that is not real money. That's funny money. But in real terms, it will at least preserve purchasing power, and it will probably do more than that in the next few years. So therefore, it's not just insurance. It probably will be a very good investment on top of that, in my view. But you're not buying it for speculation. You're buying it to protect your assets.
Thank you very much. And you were mentioning the governments. There's a lot of governments buying gold too, and so do you think it's eventually going to get a gold-backed standard to our currency? Is that a possibility?
What's happening is that the West has been selling gold for 30 years at least, 40 years. And the East has been buying. So Western governments probably have a lot less gold than they say they have. They're not telling you how much they have. They never have an audit that is official. So you never know. The US government has not had a formal physical audit since the Eisenhower's days in the 1950s. So you never know how much gold the US really has. But we know that Western governments have been reducing their gold holdings, and China and India are buying all the gold that's being produced in the world every year. So there are shortages of gold, and there will be much greater shortages in coming years. Coming back to the gold standard, I hope there won't be a gold standard, because as soon as there is, governments will cheat. and manipulate it. So it would be just better to have free gold when nobody interfered in the gold market. But then you wouldn't, also free gold would mean that they wouldn't be allowed to manipulate it in the paper market like they're doing now. But it's still possible that, there are ideas that the US, for example, will convert their gold or have gold back their debts. And therefore, the gold price should be at least $50,000 if they actually had gold backing the dollar and backing the US debts. Whether that will happen or not, I don't know. And it really, I wish it doesn't happen, because, as I said, I don't want governments to interfere with gold. But nevertheless, whether they do or not, we know that gold will go substantially higher in the next few years because of the state of the world. But it's not the fact that it goes higher. I have to stress that it's the fact that you have to own it as insurance, not because it's going to go up in price. You need to do it because otherwise you might not have, your banking assets will certainly be worth a lot less, if anything at all, in coming years.
So your money would be a lot better placed doing it in metals now rather than keeping the paper currency in your bank account.
That's my strong view, and then people have to decide: do I put of my liquid assets, do I put 10% or 20% or 50%? We have clients. I think the minimum our clients have is 20% of their investment assets into gold or silver. Some own also. We have some who have 75, 80%. So everyone has to decide for himself what he feels comfortable with. What I can assure you of is that when these things start happening, people will put more and more into gold because they'll get more and more nervous. It's just been too easy to invest in the last few decades because everything has been just going up because of printed money. Stocks have been going up, bonds have been going up, property's been going up. That time is over. And you just look at the stock market. The Dow is down almost 70% against gold since 1999. People don't realize that.
No, I didn't realize that.
It's turned, and in my view, my forecast is, and I could just look at it historically, what's going to happen. I think the Dow will go down another 90% at least against gold. Because that's, in 1980 it was 1 for 1, one Dow, one gold at about 850. Both were 850, and I think that we're going to see less than 1 for 1, maybe half for 1. That means that we don't know what the Dow is going to be, because if we get hyperinflation, the Dow could go very high, but that's worthless money. But relatively, gold will vastly outperform the Dow and all other stock markets in the next few years. And the same with the property market or real estate market. That's a bubble. It's been financed by the credit bubble. And again, gold has already in the last few years outperformed that, and it will continue to outperform the property. So in my view, to own property today is very high risk. People don't think that. But they will soon realize it, because most of this property is financed by credit, and once credit runs out, and these assets will implode. So you talk about risk. It's all about risk. It's not let's say my forecasts are wrong. It doesn't matter. The risk is there whether my forecast is wrong or not, and you've got to insure against that risk at whatever level you are comfortable with.
I think one of the best comments one of my friends had after she moved all of hers out of the stock market into metals was that she said, I sleep so good at night, and I'm not up in the morning to see what's been going on in the market. She said that for their peace of mind, it was like nothing like it. Yes. The best medicine.
Yes. No, you're right, because when you buy gold, you shouldn't really worry about the value every day, because you're valuing it in something that is falling in price on a daily basis, i.e. all the paper currencies. So they will continue to fall, and you think you're getting very rich. But you've got to look at the purchasing power, not actually what it's worth in dollars. So you should look at, I own X ounces of gold or X kilos of gold. That's what you should look at. You shouldn't look at it's worth $100,000 or $1 million or whatever amount of gold you have, because that's not really relevant. It is only relevant if you've kept the money in the bank, because yes, then they'll be worth a lot more. But the money in the bank will, as I see the world, go down dramatically in real value and in purchasing power. And this is why you want to put some of your money into an asset that maintains your purchasing power. It's very simple.
You make it sound very simple. Thank you for a simple explanation about these very confusing questions. That there's so much misinformation out there. That's the problem.
You know that you know that banks and asset managers, they hate gold, because so that's why they recommend to people not to buy gold, buy stocks and buy bonds, buy things that we can earn a lot of commission on. And that's why nobody understands gold, and therefore nobody talks about gold. No investment advisor ever talks about gold because he doesn't understand it.
Great, thank you very much for helping all of us.
Thank you.